And so by the time you get to 2026, which is kind of around the time Phil and I have forecast the peak of the current cycle, often it's people who've suddenly can no longer hold on to their views, which have been proven not to work for a few years, and then they change. And that's almost sometimes a signal that, things have got to the top. Every cycle, there's always something that sucks in people's hard-earned money, and it goes way over the top. These things are almost designed to part you from your money. So you do need to pay attention.
Hey guys, welcome back to the channel. I've got a special guest on today. I've got Akhil from Property Sharemarket Economics. We are going to get into the housing cycle, the economic cycle, and answer your questions which you posted on my Twitter and on YouTube. Before we get into it, make sure you hit the like button down below if you want to see more of this content and stay up to date. Obviously, we're doing a lot with cryptocurrency and the stock market, and there's going to be times where we need to be rolling our profits into other areas of the market. Remember to hit the subscribe button, bell notification icon, so you guys can be updated with the content. I'll cross over to Akhil. Thank you very much for your time today, mate. I've been wanting to do this interview for so long.
Thanks for having me.
Yeah, anytime. I have to do a few more. I just mentioned at the beginning, you're the co-founder with Phil Anderson at Property Sharemarket Economics. The guys on my channel know I've talked with Kathy quite often. She's also works with you guys at Property Sharemarket Economics. Just give us a little background, and then we want to get into all the questions people had about real estate. The market, is it heating up? Are we going to crash in 2021? We've got a lot of questions, but yeah, just give us a quick background to yourself and Property Sharemarket Economics.
Very nice to be on your channel. Thanks for inviting me. So I've been studying economic cycles and so on pretty much since the financial crisis in 2008. And I got into it partly because my family's business was having a pretty difficult time. And I didn't really feel the explanations for why that were satisfying. So I thought I'm going to try and understand what's going on in a more fundamental way, and then develop some kind of knowledge to help my family in the future and other families and businesses and investors make sure that they don't get burned during such periods, and also take advantage of the economic booms that also take place. Because often people miss them. They jump in too late. Often near the end, and always have a sense of FOMO that they need to get in, and it's often at the wrong time. So I wanted to really help people address that. And I came across Phil's book around 2008, changed my life, I have to say. Really explaining and detailing the economic cycle in the US from 1800. And soon after, we started working together on various things, and Property Sharemarket Economics was in some ways a culmination of that collaboration. But we've got big plans for the next few years, so really very much looking forward to it.
And the book, of course, is Secret Life of Real Estate and Banking. In terms of the business coming forward, it's Property Sharemarket Economics. The guys know I talk about it a lot. I'll repost your stuff. It just makes so much sense in the cycle. And that's essentially how I found it in about 2012 and 2013. That's when I started following Phil for the first time. I was into the property cycle of doing investing, and I was just wondering, everyone can tell me when to buy, but why can't someone tell me when to sell? And it's because most people don't have a definitive answer of that. And I noticed that with maybe an interview that we can chat about today, it was Harry Dent, who actually wrote a bit of a quote or a blurb on the back of Phil's book. I mean, you've spoken to Harry Dent before.
I know of him. I've not spoken to him directly.
All right. Yeah. We'll have to get a meeting one day, but I know Phil definitely has. I don't understand how we can have two completely different views of the market. Harry Dent saying the market is going to crash by up to 90%. This is the stock market, and property by about like 60%. Yet Phil is saying we're going to go up into 2026. Yeah. I mean, from your studies, how does this happen, and how do we get so confused?
Well, I mean, it's often the case that people have very different views about things. I'd say, I mean, look, I don't want to be too dismissive of people's sincerely held views, but I found over the years that Harry is kind of always calling for a bit of a crash. I mean, he certainly was doing it in 2015 and 16, and certainly in 2017, he released a book called 0 Hour, which was talking about an imminent crash, which didn't happen. I'm not sure actually that he called the crash last year. I don't know. I'll have to check. And he's calling a crash again. Look, at some point he will be right, because economies do go through boom and bust, and we will at some point towards the end of the decade, in our view, have a major sort of financial economic crisis. And so if he keeps his forecast kind of ongoing and he updates the dates every year, he'll be right eventually. Now, why, from my point of view, he kind of has some very good, interesting data on demographics and so on. And clearly, where you're in an economic sort of situation where you've got declining population, that's not great for growth. And if people lose confidence, then, things can crash. And so I feel that, that's a very good, important piece of the puzzle, but it's not the only one. And as Phil details in his book, and as I've written in for various newsletters and for Property Sharemarket Economics, it's really ultimately the economic cycle is based upon understanding how it links to the property market and how bank lending is linked to people taking on mortgages and borrowing to acquire commercial real estate. And then understanding that at some point, after you've had a good few years of growth and prosperity, that turns into speculation, goes over the top. And then that's when you get a major economic crisis. Now, the thing that confuses everyone is that in the middle of that sort of expansion, you often get a mid-cycle recession. And at the mid-cycle, people think, oh my gosh, the crisis is about to return. And, we're going to have another global financial crisis or another Great Depression. And because you haven't had the major period of speculation before that, you tend to find that what the government does to stimulate the economy works. And then that sets off the second half. And I think it's almost because people have a sense of confidence that, the government knows how to manage the economy. That's why you get a major boom. I think Harry doesn't understand that part of the picture. I'm sure he understands the significance of real estate. He doesn't understand the significance of government action at the mid-cycle. And so he takes a few different facts and, in my view, kind of sort of puts two and two together and gets, 56 or something. So we
get a crash every year leading up to it.
Yes, we'll get a crash every year. And I'm probably being a bit facetious here, and I know some people follow him very closely.
I'm putting you on the spot here, so to the viewers,
that's fine. And look, I'm happy to be, and I'd be happy to debate some of these things with him or with other people who would like to take that point of view. But I think the reality is that people who are often calling crashes every year, it's almost the year that they decide to update their views is the year that you do actually get the crash. And so your 2021 crash doesn't happen, 2022 crash doesn't happen. And so by the time you get to 2026, which is kind of around the time Phil and I have forecast the peak of the current cycle, often it's people who've suddenly can no longer hold on to their views, which have been proven not to work for a few years, and then they change. And that's almost sometimes a signal that, things have got to the top. You saw that a little bit, sort of just by the by, you saw that a little bit at the start of 2020 when you had people like Ray Dalio, the really big hedge fund manager, and I suppose now you'd say he's a business guru, and his chief financial officer at his hedge fund Bridgewater kind of said in Davos, the World Economic Forum, that the business cycle as we know it is no longer present. There was a certain nuance around what he was saying, but it made a good headline, and that almost called the very top of the market.
I've noticed Ray Dalio as well has gotten really into the bear frame of mind, and it tends to. I wasn't around in 1982, but it reminds me of the stories I've read about Dalio in 82, coming from his own mouth, where he believed in 1982 that the market should crash, and he was looking to short it, and then it was literally the bottom before it took off into 1987. And so I wonder how he's doing that again. And these are sort of the biggest names that are, like you said, business gurus, finance gurus, investment gurus online now, and a lot of people follow them quite religiously. Ray Dalio's, Warren Buffett's, and then Harry Dent now with the every day's a crash.
Yeah, it's interesting. I think they have a certain view of the world which doesn't, in my view, is not complete for the reasons I outlined. To be fair to Ray Dalio, because obviously he made a lot of money, he's able to recognize that he might have called something wrong and changed his mind and go the other way. So he still does well out of the boom.
Yeah. I mean, that's a good sign of an investor as well. That's
exactly.
Yeah. The 18.6 year cycle is something that I talk about. And if people aren't aware of it, you were talking about a call at the end of 2026. Do you just want to quickly recap that? Like, what is it? How did we get there? Where are we?
Yeah.
Why is it the cycle that we follow? There's so many other things out there. Why is this the one? Sorry.
Why is this the one? Gosh, well, maybe I'll start with that. So, the most important asset in our economies is our land. By far and away the most valuable asset, much bigger than the stock market, much bigger than the bond market, and so on. And most of what banks do is lend against real estate, for collateral for loans. If you want to buy a house or if you want to start a business, often you have to pledge your piece of property to acquire that. So the biggest asset attracts all the bank lending in an economy. And so we're all basically exposed to the ups and downs of the real estate market. Now, why does land keep going through boom and bust? Well, because when economies grow and get more prosperous, when government puts in infrastructure, when people move into an area, property prices go up, and it therefore makes it a very good investment because in general our economies tend to grow. We tend to get wealthier over time, and because it's a good investment, people jump in. And that can go over the top, as with any asset class. It's just that in the biggest asset class in an economy, it can go way over the top. And so you get these sort of periods of boom and bust. Historically, we have seen, and the evidence is, if you care to take a look at it, very clear, that for the last 200 plus years in the US and the UK, I mean, we focus on those two countries because they have the most long-running data. They're the economies that have, in some senses, been the most stable over that period. Whereas other countries like, Germany has, been split apart and reunified. Other countries were under dictatorships, or in the case of, say, Japan, they were ultimately, very severely damaged in the Second World War and had to rebuild. So, but the US and the UK have had that stability. So you can see the data very clearly.
Most reliable data.
Most reliable data. And Australia is also part of that picture, except that in 1800 it was, maybe not quite the great economy that it is today, shall we say. So in those countries, you see since 1800, 18-year kind of real estate cycle, things start pretty slowly. People are recovering from the prior crisis. You get a few years of recovery, shall we say, but relatively slow and steady growth. As that sort of picks up, you might get a bit of a mini boom into a mid-cycle recession. Just, sometimes things can go a little bit too far, business can expand too much. And so there's a bit of a pullback into a recession. After the recession, during the recession, governments tend to stimulate the economy. And then that works. You get out of the recession because you've not had the major crisis. And the second half is a boom. The first half is roughly 5 to 7 years. The second half, the boom, is 5 to 7 years as well. The final couple of years of the second boom is typically really manic period where things are really going over the top. Everyone's getting FOMO, everyone's jumping in. Banks are very happy to lend you whatever money you would like to buy, whatever you want, sort of thing. Goes way over the top. At some point it peaks, and then you have a major collapse and crash. And typically in the crash, at the end of the cycle, if you take the US market back to 1800, the stock market has typically fallen about 50% in price. Property markets in real terms goes down about 20 to 30%, but that disguises from that peak typically on average. Yeah. Now, some areas it might go down less, I suppose, at the center of major cities which are still growing, because people ultimately need somewhere to live. So some might not go down as much, but other places might go down much more significantly if there's been a huge amount of speculative building way above, reasonable estimation of demand, which is often what you get during a boom. The price of real estate can collapse much more significantly. And so then, the banking system collapses. They stop lending to businesses fail because, they rely on working capital and so on. They lay people off, people stop spending, et cetera, and that process takes a number of years to play out. Typically 4 years if the government is relatively quick to act. If it's not, then it can take a bit longer.
Currently, we're in that mid-cycle section. We've seen that first 5 to 7 years, which was, I think it was about 7 or 8 years. And now we're in that
it's
middle
a bit
section.
longer. It was a bit longer this time. Yeah.
Yeah. And where did the bottom start from?
We're emerging from the mid-cycle recession now.
Emerging from it. When did the mid-cycle, when did this cycle begin? What year, month?
Well, so the US tends to lead other economies by about 6 months to a year. So I think the US probably started around 2011, 2010, possibly. I mean, there's never one particular day that it starts. It's sort of it's a process of starting. The UK, maybe 2012.
Australia, similar, I think.
Similar, yeah. I mean, Australia, the thing was a little bit muddied because, well, first of all, Australians saw the crisis coming, and so you were able to get in stimulus before it sort of had arrived. And then in China and the US both enacted enormous stimulus packages in 2009. And that really saved the global economy from something more severe. What it also did was pushed up demand for commodities in China in particular. And the commodities boom in between 2009, 2011 obviously had a very beneficial effect on vast parts of Australia, particularly around Perth and other areas. And so people say, oh, well, we didn't really have a downturn. I mean, I'm pretty sure that in sort of more, say, peripheral economies or communities where there'd been a bit too much property speculation, actually things were pretty grim for a bit of time. But you didn't necessarily see the severe downturn that we did in the UK and in the US for that reason. But that's not to say that the next one won't, affect Australia more significantly.
And that's what I was just writing some notes down here, looking at what's happened in the past, at 20 to 30% from the peak, obviously, roughly speaking, some areas less, some areas a bit more. Why could this next time, could the prices fall further because of the amount of money printing? We're always led back to that chart of last year, 2020 had 25 or 30% of the world's money printed, or the US's money printed in that single year alone compared to the entire history. Could we not see a bigger downturn in property prices after this peak in 2026?
Yes. I mean, it really depends on what will happen between now and 2026. So I mean, just for clarity about a US money printing, quote unquote, I mean, we can get into that now or in another video. I mean, if you ask people to sit at home and do nothing for a year or so, if you want to keep that capacity in your economy, you're going to have to you're going to have to pay to do it. And so that's basically why the amount of money that the US government spent reached that level. It wasn't to bail out banks as it was in 2008. It was simply to keep capacity in the economy such that when we got through the pandemic, things could start up again. And, what we have found actually is that, in the UK, we're now, I think half of us are now vaccinated and things are starting to open up. And there is actually all that spare capacity in the economy, so the rebound this year will be pretty significant. They think the UK will record its highest level of growth in 70 years later this year. I mean, obviously, we lost a lot of things last year, and so we might not necessarily be back to where we were at the start of 2020. But it just goes to show that, in that sense, the stimulus packages did what they were intended to do. What will push a period of property speculation into overdrive and take it way over the top is the amount of money that banks will print. So banks, when they lend, print money as well. It's the amount of money that banks will print over the next 5 to 6 years. And if that goes way over the top, then of course, when that whole process stops, then prices can come down very significantly.
Right. So we've got to wait to see what happens in those years, because then we can adjust, or we can forecast a little better of maybe how far it could fall.
Yeah, the bigger the boom, the bigger the bust is typically kind of
true.
A good way of thinking about it.
A lot of people ask, how can we afford to pay higher prices from this point? I know where I am in Australia, Sydney, Melbourne, you might be familiar with the prices here, being in the UK.
Yeah, they're high, just like London.
a million's kind of like, that's sort of where you're sitting now. Sydney, Melbourne, easy. Gold Coast, where I am, you want anything reasonable, it's sort of like 800, a million, 1.2. how does it go any further from this? They're at zero now. Wages haven't grown.
Yeah.
How do the prices go up further?
Well, I mean, I suppose, wages won't always be zero. I mean, if you have a commodities boom, as you tend to get in the second half of each cycle, I would imagine that is quite bullish for the Australian economy. Obviously, if people can't afford to service their debt, then they can't afford bigger loans. But, we have historically, I think in the late 80s was a good example of that. I think we were paying more, even though prices were lower and loans to values were lower, people were paying more of their disposable income in mortgage payments than they are now. So there is room, as far as I understand, for things to go up. I think the real killer is firstly, will banks be willing to lend you that much? Because they're still, to a certain extent, not going. There's not a free for all, at least not from what I can see. It's based here in London, vis-a-vis London, but also what I can see in Australia. They haven't
eased the regulations yet in Australia, but I think that's coming. Yeah.
I suppose the real sort of problem is, how do you raise the deposit? Because you've got to have 10% down or 20% down, and if it
then they reduce the deposit, right? That's what we've seen in the past.
So that's the thing. Yeah. So you can access the property market with a smaller deposit and a bigger loan if interest rates are low, and you have a certain level of them being fixed, and you can afford them on day one. Well, presumably if you're in a decent job, you'll be getting more money over time, and so it becomes a bit easier. It's mostly the case in London that if you buy, you're typically buying with a partner, so it's two incomes that are servicing that loan. And so there are basically lots of different forces that enable you to do that. Clearly, if wages collapsed, which I don't think they will, but if they did, and if interest rates went from 0 to 5% overnight, that would have an immediate and massive impact on the property market. But these things tend not to happen quite in that way.
And for interest rates rising, when does that happen? People are sort of saying next year we should be starting interest rate rises. And at what point does the interest rate have to get to really put us into stress from our current levels? Because that's obviously going to play into it. People are going to say, well, it has to crash. As soon as they see one increase or two increases, or to get to a percent, it's like time for it to crash. And I guess that's how every year we get this thing saying property market has to crash, property market has to crash. So back to my question where I went on my read.
Right.
Yeah. So when will that interest rate rise, and about how much does it have to get to?
It's quite hard to say, really. So interest rates tend not to go, not at this point in the cycle, they don't go from 0 to 5 in a short space of time. And it also depends on what other countries are doing. The US has basically said that it's prepared to see an element of inflation before it starts thinking about raising rates. I'd imagine that other countries will think along the same lines. They tend to kind of follow each other to a certain extent. So, I think that's the first point. So, they may delay interest rate rises for as long as possible. The second thing is, it's undeniably true that after a decade of really low interest rates, we've got used to it. We've got used to things being very low. And so it probably won't take much of an increase for things to then start to look a bit shaky. Now, the immediate impact of that depends on, are people paying variable rate mortgages? So variable rates of interest on their mortgage. So are they immediately going to feel the increase? Or is that delayed a little bit because they're on fixed rate? Most people are on fixed rate loans in the UK, for example. In US, mostly fixed rates, and long-term fixed rates. So it may not have an immediate consequence. And then the other thing is, during the middle of a boom, even though rates might be rising in capital markets, banks are also competing with each other to do mortgage business. And so they may not pass on interest rate increases immediately onto their customers because they want to grab market share. So these things don't happen straight away and in the way that people necessarily think they will. Sure. What we do know is that at some point it becomes too much for an economy to handle. So property prices have gone too high, rents have gone too high, interest rates are starting to kick up. inflation is becoming a thing. People then start to spend a bit less, and so you don't have the same level of increase as you did in the previous years. And it's even almost the fact that the rate of increase is slowing. So you're not falling, it's just that you're not growing as much. That starts to kick off a chain reaction, which then eventually brings about the crash. But that takes some time to play out.
And that's why we're sort of looking that later part of the decade, mid to late 2020s. We've got an idea of the 18-year cycle, why it is, where are we in the cycle, when did it start, when is it looking likely to end? I'll cross over to some questions that I had from the community that I put up on Facebook, on YouTube. You won't see them on the screen, but I'll read them out here. Yeah, if you've got the answers to them, great. If not, we'll move on to the next one. They're a lot to do with the housing market prices, people first time getting in. Because my channel is quite heavily focused on cryptocurrency as well, people are kind of wondering, do these cycles meet up, and can you tell when the cryptocurrency cycle will end? I might start with that one, with the crypto stuff, and then get into the property questions. Do you know much about the crypto cycle and how that will work in with the overall property market, being as it's the biggest in the world?
I don't know anything about the crypto cycle, actually. I mean, as Bitcoin
Sorry to disappoint.
As Bitcoin becomes more mainstream, it will follow most asset classes, and ultimately will get tied to the real estate cycle, I'd imagine, in some way.
Maybe to the commodity cycle like gold, and just have these super long cycles, but it's quite new.
Yeah, possibly. It depends on what function it plays. I mean, maybe if it becomes a sort of a safe haven reserve currency type thing, then possibly in times of economic stress, it will gain in the way that gold does, and also then start to tend to move a bit inverse to the US dollar. So I mean, that's a possibility. I mean, I think in general, cryptocurrency, they're doing some fantastic and wonderful, slightly weird things. Look, I mean, every cycle, I'll say this as a bit of a warning, I suppose. I mean, I'm not knocking the idea of cryptocurrency by any stretch, but every cycle, there's always something that sucks in people's hard-earned money, and it goes way over the top. And it's often, the people who are youngest and newest who are the ones who most enthusiastically embrace the new kind of thing. And it's just a warning that, these things are almost designed to part you from your money. So you do need to pay attention. You do need to be careful. You do need to, you can believe the hype about, decentralized finance and all that kind of stuff. But these stories are themselves rarely, you're rarely told everything you need to know. So, I suspect that over the next few years, cryptocurrency will both fuel the boom and also be one of the main victims of the crisis. Not necessarily every single coin. As I said, Bitcoin might have a different function within all that, or some other, Litecoin or something else. But that is the historical evidence, and so this is my bet that this would be part of that sort of process this time around.
Money gets sucked in, people take profits, they flow out into other areas of the economy, most notably land, probably. That's at least my view of it. Yeah,
there's no kind of, none of these. Well, maybe some of these coins earn have a steady stream of earnings to show you what a reasonable valuation is. Some of them may serve some economic function in which represents a certain amount of value, which then anchors a reasonable valuation. But I think for a lot of them, they probably don't at the moment, and may never do, and so they're purely speculative. And so a price might increase, 10,000% or 1,000,000% or whatever it is that some of these things are doing. But that also means that they could go the other direction as well.
And that's generally what we see. And I feel like we're getting to that point in crypto as well. It could be another 6 months from here or 12 months, but we're nearly at 10,000 different cryptos, and majority of them tend to do that. They'll go in this massive wave, pump all the money in, sucks all the money out. It usually goes into, say, Ethereum or Bitcoin or some stable coins, fiats.
Yeah.
And then we die off for a few years and we start the cycle again. But over time, Bitcoin is growing more institutions coming in. This is sort of what we're seeing and hearing. And then maybe that becomes more in line with a commodity cycle, but it's only 12 years old. And a commodity cycle, from what I understand, is approximately 25, 30 years up, 25, 30 years down.
Yeah, they're not in a straight line.
No,
but yeah,
no.
You're right. Yes, no, that's a possibility. I mean, I think if Bitcoin takes that sort of thing, then, it will become part of the risk on, risk off type of trade. And so, it might end up being the case that when the dollar goes up because there's a bit of fear, then Bitcoin will go down. And actually, that's a possibility that we might see at the moment. I think people are a little worried if the dollar breaks above current resistance, whether that will send Bitcoin down from wherever it is now, 56,000 or whatever the price is at the moment.
Yeah, and the same thing with the technology space. It's all like sort of NASDAQ and a lot of those stocks that boomed last year. Many of them have broken some support levels. And I know that sort of plays in with the crypto space as well. Housing prices in Australia. So I'm on YouTube. You guys put in your questions today. I put out a post several hours ago. Got a lot of comments in, over 40 comments. Housing prices in Australia are red hot. When will they cool?